Hello and welcome to this video on 10 tips to save on your taxes this year. Tax season is here, and while it can be a stressful time for many of us, understanding how to save on your taxes can help reduce that stress and potentially save you a lot of money. In this video, we'll be sharing 10 tips that can help you save on your taxes this year. From retirement contributions to education-related tax breaks, we'll cover a variety of strategies that you can use to reduce your tax burden and keep more money in your pocket. So, whether you're a seasoned taxpayer or filing for the first time, this video is for you. Let's dive in. Contribute to a retirement account. One of the easiest ways to save on your taxes is by contributing to a retirement account, such as a traditional IRA, Roth IRA, or 401(k) plan. These accounts offer tax benefits that can help reduce the amount of taxes you owe. With a traditional IRA or 401(k), you can deduct your contributions from your taxable income, reducing your tax bill for the year. With a Roth IRA, you won't get an immediate tax deduction, but you'll be able to withdraw your money tax-free in retirement. For example, let's say you're in the 22% tax bracket and you contribute $5,000 to a traditional IRA. That $5,000 will be deducted from your taxable income, which could save you $1,100 in taxes for the year. That's a significant amount of money that you can use to reach your retirement goals. Claim all available tax deductions. Another way to save on your taxes is to claim all available tax deductions. A tax deduction is an expense that you can subtract from your taxable income, which can lower your tax bill. Common tax deductions include charitable donations, mortgage interest, and job-related expenses. It's important to keep good records of your expenses throughout the year so that you can claim all the deductions you're entitled to. For example, let's say you donated $1,000 to a charity and paid $2,000 in mortgage interest for the year. If you're in the 22% tax bracket, those deductions could save you $660 in taxes for the year. While every deduction may not be a significant amount, they can add up quickly and help you save money on your taxes. Consider itemizing your deductions. Another way to save on your taxes is by itemizing your deductions instead of taking the standard deduction. When you itemize your deductions, you add up all your deductible expenses, such as mortgage interest, property taxes, and state and local income taxes, and subtract them from your taxable income. If your itemized deductions are greater than the standard deduction, you'll be able to lower your tax bill even more. For example, the standard deduction for 2022 is $12,950 for single filers and $25,900 for married filing jointly. If you're a single filer and you paid $15,000 in deductible expenses, you could save an additional $1,400 in taxes by itemizing your deductions. Take advantage of tax-advantaged accounts. Another way to save on your taxes is by taking advantage of tax-advantaged accounts, such as health savings accounts, HSAs, or flexible spending accounts, FSAs. These accounts allow you to set aside pre-tax dollars to pay for qualified medical expenses, which can lower your taxable income and reduce the amount of taxes you owe. For example, let's say you contribute $2,000 to an HSA and you're in the 22% tax bracket. That $2,000 will be deducted from your taxable income, which could save you $440 in taxes for the year. Plus, if you use the money in your HSA for qualified medical expenses, you won't pay any taxes on that money when you withdraw it. FSAs work in a similar way, but they have a use it or lose it rule, so you'll want to make sure you don't contribute more than you expect to spend on qualified expenses. Take advantage of tax credits. Tax credits are even better than deductions because they reduce your tax bill dollar for dollar. There are a variety of tax credits available, such as the Earned Income Tax Credit, EITC, the Child Tax Credit, and the American Opportunity Tax Credit, AOTC. Make sure you research and claim all the tax credits that you're eligible for to maximize your savings. For example, the AOTC provides up to $2,500 in tax credits per eligible student for the first 4 years of higher education. If you have a qualifying student and you're in the 22% tax bracket, that could save you $550 in taxes for the year. Be strategic about charitable donations. Charitable donations are tax deductible, but it's important to be strategic about when and how you make your donations to maximize your tax savings. For example, if you donate appreciated stock that you've held for over a year, you can avoid paying capital gains tax on the appreciation and still get a deduction for the full value of the stock. Additionally, if you're close to exceeding the standard deduction, consider bunching your donations by making 2 years' worth of donations in 1 year to push you over the threshold for itemizing your deductions. It's important to note that you should only donate to charities that you believe in and that align with your values. Don't donate solely for the tax benefits. Keep track of your business expenses. If you're self-employed or have a side hustle, make sure you keep track of all your business expenses. You can deduct business expenses from your taxable income, which can lower your tax bill. Common business expenses include office supplies, advertising and marketing expenses, and travel expenses. For example, if you're a freelancer and you bought a new computer for $1,000 for work purposes, you can deduct that $1,000 from your taxable income, which could save you $220 in taxes if you're in the 22% tax bracket. Maximize your retirement contributions. Contributing to a retirement account, as mentioned in tip #1, is not only a smart financial move for your future, but it can also save you money on your taxes. Make sure you're contributing the maximum amount allowed to your retirement account each year, if possible. For example, in 2022, the maximum contribution for a 401(k) is $20,500, and the maximum contribution for a traditional or Roth IRA is $6,000, or $7,000 if you're 50 or older. By contributing the maximum amount allowed, you'll reduce your taxable income and potentially save hundreds or thousands of dollars on your taxes. Plus, you'll be investing in your future and setting yourself up for a comfortable retirement. Consider tax loss harvesting. Tax loss harvesting is a strategy for reducing your tax bill by selling investments that have decreased in value to offset gains from other investments. By selling losing investments, you can use the losses to offset gains from other investments, which can reduce your taxable income and lower your tax bill. For example, if you have $10,000 in gains from one investment and $5,000 in losses from another investment, you can use the losses to offset the gains and only pay taxes on the remaining $5,000 in gains. Consult a tax professional. While these tips can help you save on your taxes, tax laws can be complex and change frequently. It's always a good idea to consult with a tax professional to make sure you're maximizing your tax savings and taking advantage of all the deductions and credits you're eligible for. A tax professional can also provide personalized advice based on your specific financial situation. Investing in the services of a tax professional can be a smart financial decision, as they can potentially help you save much more on your taxes than you would have on your own. In conclusion, there are many ways to save on your taxes this year. By following these tips, you can potentially save hundreds or even thousands of dollars on your tax bill. Remember to keep track of your expenses, maximize your deductions and credits, and consult a tax professional if you have any questions or concerns. By taking these steps, you can take control of your finances and make the most of your hard-earned money. Don't wait until the last minute to start preparing for tax season. Start now and take advantage of every opportunity to save. Thank you for watching, and I hope these tips have been helpful.